start screen sharing. Yeah, I just started the recording like 20 seconds ago. I post all the recordings on YouTube. Yeah, I'll drop my YouTube in the thing real quick. It should be like a Silver Surfer profile picture. I'll give it like 2 more minutes so I see like a couple more people join. Oh yeah, so I pay for like the the trading view subscription, so you just at the top right you just click this thing and it can split it into 2 different things. I just have ES on one side and NQ on the other. I used to have 2 different time frames though. No problem, bro. Alright, so someone asked me if I could go over what I personally like look for every day, like a top-down approach. So, do you guys want me to start with that, or do you want me to start with like a weekly review and like outlook? Okay, so okay, top down. Okay, so anytime I look, um, so whenever I come to the charts, the first thing I do is look at Forex Factory. So let me pull up my browser. You guys can see this, right? Okay, so first off, I always look for days that we have red folder news. So next week, it's gonna be Tuesday, Wednesday, or Tuesday, Thursday, and Friday. So this is very important because the 3 days you usually want to look for large expansive moves in the markets would be Tuesdays, Wednesdays, and Thursdays. So Tuesday, Wednesday. Oh, I can't spell. Thursday. The YouTube channel is, yeah, it's in charting. So these are days that you typically want to look for expansion. So after I do this, I I usually either go light risk or I completely just let Monday print, because Monday usually accumulates when we don't have any red folder news. So I just let Monday print and I just determine where the draws on liquidity are after that. So if I see a large, so for example, if Monday prints and I see a large range with no manipulation below weekly open, um, I start to think to myself, like, this isn't a normal scenario, and most likely Tuesday will form the high of the week and then reverse. So after I look at Forex Factory, let me write this down. So first I check news, and then I try to determine what the weekly profile is. So this is why I let Monday print, because from there I can determine what I think Tuesday and the following days will do. So once I have that, I then determine whether we are going from ERL to IRL or IRL to ERL. So what would be, so I'm pretty sure most of you guys know what this is, but what do you think will happen this week? Let me go to the NQ chart. Let's see. So just looking at this chart without me telling you guys anything, where do you think price is likely to head right now? Yeah, exactly. We're going from the IRL to the ERL. The IRL being what? This fair value gap and this breaker block right here into where these lows right here. So these equal lows. These are too smooth. The market's gonna seek these out. So if we seek these lows by Monday or Tuesday, we can frame a classic buy week. So there's three main weekly profiles that you want to look for. So this will be your main weekly profiles. So this will be your classic buy / classic sell, your midweek reversal, and your void profile. Last week we had kind of a weird profile. It was a seek and destroy Friday reversal. But this rarely happens. But the three at the top, these are the three weekly profiles you want to focus on. So for a classic buy, I'll draw a diagram. So let's say this is your H4, any IRL. It could be a fair value gap, it could be an order block, it could be whatever. So let me split these days up. I'm just gonna split these into the days of the week so I can make a good diagram of a classic buy or sell. Okay, so this is Monday. This would be Tuesday. Wednesday. It's a little off center, but it's all good. And then Friday. So when we have a classic buy week, so when looking at the weekly chart, when we're delivering on the weekly, you want to see a 4-hour market maker model out of your point of interest. So this would be, sorry, not H4, this would be weekly. IRL or ERL. So out of this weekly level, you want to be able to frame a 4-hour market maker model. So for each of these IRLs or ERLs, or each liquidity point, there will be an aligned time frame, which are the aligned time frames for your entries. So the aligned time frames for the entry models are the same for the market maker models. So for a classic buy week, so let's say Sunday opens and we have a range like this, and then we have London open, it does whatever it does, and then New York comes down and forms a low, and we immediately start displacing like this. So to me, this looks like a classic buy week. So when you have a classic buy week, you typically want to see Monday or Tuesday put in the low of the week, and then you would see expansion throughout Wednesday and Thursday, and Friday caps off the range. Or we will have a TGIF setup where, so let's say we have this large weekly candle right here, and it's also, so the TGIF usually works when we have a classic buy week. So let me just draw this candle. So this is your candle. So you take your fib, so let's say it's a classic buy, right? Monday, Tuesday forms the low of the week, Wednesday, Thursday expand. You take your fib from the high to the low of the candle, and you mark out, oh, I did this wrong, like this. So you mark out 20 to 30% of that weekly candle. So Friday usually presents a TGIF setup when like I said, a large expansion candle has been put on the weekly. So you typically will see a fair value gap or a PD array line up with 20 to 30% of this weekly range. So a good example of this was last week on NQ right here. Yeah. So we had this large expansive candle from, where's Thursday? Monday's down there. Oh, this is a huge range. We go on the 4-hour. Right here. So you take your fib. Thursday is right here. Yeah. So you guys can see around this 30 or 20%, what do we have here? Fair value gap. And what does price do? It reacts around 20% of our weekly candle, taking our low from Sunday where we opened the week and the high that was put in on Thursday, and price delivers off of this BISI and targets what? Previous day high. So the TGIF setup usually appears when we have a classic buy week. So your other weekly profile, as the name suggests, you would see a midweek reversal. So this would be when Monday accumulates and we sort of have a seek and destroy profile for the week where we just target highs and lows like this. And then Wednesday comes in, takes the low into our point of interest, and shifts market structure, distributing through Thursday and Friday. So this would be your midweek reversal. The name just gives away the weekly profile. So this would be your second weekly profile. And the third profile is a bit harder to trade. It's usually when there's just a void of liquidity. So we open the week, like I said before, Monday, and we just rip to the upside like this throughout Thursday, or Tuesday and Wednesday as well. So these kind of weeks are pretty hard to frame, because there's very clear liquidity that is engineered, and the reversal can happen at any time. But the way I approach these kind of weeks are, um, I'm very careful on Monday. I just let it print, and then Tuesday I'd expect it to continue higher until a draw is met on either Wednesday or Thursday, so that Thursday can reverse. So when so Thursday is a very common day for price to reverse, mainly due to the fact that Wednesday expands, and if Wednesday meets the draw on liquidity, Thursday will most likely reverse. So the void profile week is a bit harder to trade, mainly because there's no clear manipulation above or below weekly open. So when this happens, my eye is immediately drawn to what Wednesday does. So given what Wednesday does, or given what Wednesday will do, which would be reach our point of interest, which should be either an IRL or an ERL, I could frame that Thursday would run stops on Wednesday if we have 8:30 news, and then trend downwards or upwards. And our last weekly profile would be the Seek and Destroy Friday reversal, which we had this week. So it's pretty much just a classic Seek and Destroy. We take the highs, take the lows, like this, throughout the week. And then Friday comes in and forms some sort of reversal below or above weekly open and caps off the range. So this is a good example of, so for this week was a good example of a Seek and Destroy week. You guys can clearly see weekly open. Let me mark it out here. So this is your weekly open. And look what price does. It creates this sort of broadening structure where we seek highs, seek lows, and there's no clear distribution throughout the week. And Friday comes in, reverses off of this key level, forms an SMT, and caps off the range within 50% of the weekly range. Yeah. So this week, Seek and Destroy weeks are really rare. I'm not too well versed on them. I just take whatever the market gives me. But I would suggest that for weeks that are a bit harder to trade, like this one, you shouldn't be married to your bias. You should just look at what the market does and look at what it provides you and just frame your trades off of that. So weekly profiles are the second thing that I do, and then ERL to IRL is just pretty basic. So after I do that, what I look for is what daily profile we are in. So there are, I don't really know them off the top of my head, but a very common daily profile would be your London reversal. So let's say price opens up during Asia, we have an accumulation like this, and then London session opens and we take sell stops, or buy stops, sorry, up here, and we start reversing and we tap into an H1 or an H4, or it can be anything greater than an H1 PD array, form an SMT, and we also get a change in the state of delivery. So usually you want to look for a reversal before 6 a.m. Usually around 2 or 3 a.m. when you want a classic London reversal. So London forms a reversal, and as it climbs up, you want to see PD arrays being formed. So fair value gap up here, maybe an order block down here. New York opens, maybe you'll see some accumulation. And then if we have a high impact news driver, you want to look for 8:30 to do what? Manipulate. So this is when you'd find a very high probability turtle soup. So New York session opens, London forms a reversal. What do you think New York will do if we haven't met the draw on liquidity? Continue. So this is why I tell you guys these key times, 8:30, 9:30, and 10 o'clock, because there's logic behind each one of these times. So I personally trade the 6 a.m. to 12 p.m. 6-hour PO3. So what I do is I break up this candle into 4 different quarters per se. Break into 4 quarters. So these would be as follows: 6 o'clock. Let me write it like this. That's too confusing. To 7:30. 7:30. I use a 6-hour mainly because I'm able to use these times as key times. I spent like a couple hours breaking down the 6-hour, and I found that this worked very well for me. The 4-hour PO3 is really good as well. The one that he uses at 10 o'clock, it's really good. And then we get 10:30 to 12. Does this apply to intraday trading too? Yeah. So this is the first thing that I look for. I'll explain what I look for after. Okay, yeah, I'm just about to explain that. So you guys know that when a candle has an accumulation, or the profile for a candle can either be AMDX or XAMD. So X, you guys know what AMD is, that's just power 3. What X is very important because it can either continue or reverse. So if we take each one of these times and we apply AMDX or XAMD to each one of them, it lines up with these key times. So let's say you head into the day, you look at the charts, and you see that 6 o'clock to 7:30 accumulates, correct? What do you expect 7:30 to 9 o'clock to do? Manipulate. So when we have red folder news, 9:30 or 8:30 usually manipulates when the New York session opens. So accumulation, manipulation during 8:30, which lines up with what? A manipulation time. And then 9:30 will do what? Distribute. And then you would expect 10 o'clock to either reverse or continue. So this is also why the 950 to 1010 macro works so well, mainly because of 2 things. A macro can either reverse or continue. Why? Because of this X factor. X will either continue or reverse based on whether or not the draw on liquidity was met. So let's say, for example, X is either reversal or continuation of the previous trend. It all depends on whether or not the higher time frame objective was met. So let's say by 9:50 we meet the draw on liquidity, 10 o'clock will reverse. So for another example, let's say that 6 o'clock to 7:30 forms a reversal or a continuation of the previous trend. What would you expect 7:30 to 9 o'clock? You would expect an accumulation, correct? And then 9:30 to 10, 9:30 or 9 o'clock to 10:30 to do what? Manipulate. So what happens at 9:30? You have your Judas swing, correct? So 9:30 opens, you get your Judas swing, and then you would expect 10 o'clock to distribute. Yeah, 10 o'clock can also manipulate, yeah. So 10 o'clock's manipulation would be the start of a reversal or a continuation. You always miss the Judas swing. Usually the Judas swing should end by 9:53. That's when you want to see the entire Judas swing form, and you can frame a trade off of that. I only trade the 950 macro for that reason. What time frame? I usually, depending on how large the candle bodies are, like how large the ranges are. So let's say if it's a huge range, I wouldn't enter on the 5 minute. I would enter on the 1 minute, but I enter on the 3 and the 5 the most, I'd say. So this would be your. So this is the sequence you guys always want to look for. 8:30. If 8:30 does this, 9:30 will do this. 10 o'clock will do this. How will the Asia sweep? Okay, so if you see, let's say Asia forms the high of the day. Let me put it up here actually. So we reach our higher time frame objective the day before on, let's say, a Tuesday. Wednesdays are known to expand, so sometimes we will just, if price is in a hurry to get to where it wants, we will usually just form a new day opening gap. Asia opens, we accumulate a little bit, and then we just start completely dumping throughout the day. So these kind of days I typically avoid when we have large expansions to the downside like this. I'm pretty sure, or to the upside, I'm pretty sure we had a day like this a couple of weeks ago, right here. Yeah. You guys can see we close, and then Monday or Sunday, we open and just completely dump. Why? Because price was in a hurry to get to its objective. So a couple of weeks ago, we outlined that these lows were our draw on liquidity. These were our IPTA 60 lows. So I'll quickly explain what. Wait, hold on. Can you show one more time when 8:30 does this? Okay, so basically what I mean by this is, so what you want to look for is whether or not 8:30 accumulates or manipulates. So if 8:30 manipulates, you would expect 9:30 to distribute, and then you would expect 10 o'clock to either reverse or continue. But if 8:30 accumulates, you would expect 9:30 to manipulate, which would be your Judas swing, and then 10 o'clock to distribute. Wait, is the screen share not loading for all of you guys, or I can restart it real quick. Yeah, this is all EST. Can you guys see it now? Alright. Okay. So, do you still have are you still a bit confused about the 8:30, 9:30, 10, Donnie? Or you got it? Yeah, pretty much. 8:30 would manipulate, 9:30 distribute, and depending on whether or not we meet the draw, 10 o'clock will reverse or continue. A time, and also another thing, you want to see the high, like a high or a low, put in by at most 10:30 to 11. Put in by 10:30 to 11. So if this doesn't happen, if a high or low is put in before this time, you can expect lunch to run those stops. Yeah, manipulation is just a grab of liquidity. Yeah, high impact news plays a huge role. Okay, so yeah, as I was saying before, sometimes Asia will just completely rip to the downside, which is I rarely see this. Like, I've rarely seen this, but then again, I haven't been trading ICT for too long to know that. But so this pool of liquidity was our objective a couple of weeks ago. Why? Because this was our original consolidation for our daily market maker model. So I can just quickly outline this market maker model for you guys. I traded options for a couple of years before ICT. So for every market maker model, there will be, so let's mark out the yearly opening first. So all the way back here. Here. This is your yearly opening price. So market maker models are the lifeblood of the markets and are basically like how the markets move on any time frame. But this is just on the daily time frame because this is what the smart money looks at. They don't look at the smaller time frames. So the year opens, and what do we have? A clear accumulation, right? So what follows accumulation? Manipulation. So also note the month that we manipulate. We manipulate in April. So like I was telling you guys before, you're gonna have either two profiles, AMDX or XAMD. So judging or based off of what we see on the chart, what do you think this profile will be? AMDX, correct? So accumulation, manipulation during what? The second quarter of the year. So from January to March, we do what? Accumulate. April opens up. The second week forms our smart money reversal with SMT at these lows right down here. Where is it? Yeah, right down here. Form an SMT. And we get a daily change in the state of delivery right here. Right here. This is your change in the state of delivery. So we have SMT. SMT is basically a Kraken correlation between two assets. So if you see the ES chart to my right here, you see how my cursor is hovering over this low and the NASDAQ took that low, but the ES didn't take it? This is a Kraken correlation between two highly correlated assets. Yeah, I trade futures. So we get this daily change in the state of delivery down here. So what I do is when we get this change in the state of delivery, give it an SMT at a key level, I take my fib from this low to this high and I draw a standard deviation. So the thing with standard deviations, there's a lot of variety to how you can use it, but personally, yeah, standard deviations are OP. So I usually take it from the leg, the bottom of the leg to the top. That changes the state of delivery and also forms a smart money reversal. So this low to this high, you guys can see how we tapped into this level and we keyed off of it. So standard deviations are very important if you know how to use them. So the thing with standard deviations, so not a lot of people teach about this, but the key levels for your standard deviations are -1, -2 or -2.5, and your -3.5, -4, and -4.5. So each one of these, each manipulation leg will have a certain amount of expansive energy. So what I mean from this is, given this manipulation leg, we're either gonna expand towards this -2 and then start to reverse, or we hit this -3.5 to -4.5 level and then form a new market maker model. Yeah, I usually draw my standard deviations from the London manipulation leg. Yeah, you got it. You're completely right. So you guys can see this -1. You also need logic behind this, which are basically your liquidity pools. So you guys can see we have this low resistance liquidity all resting near what? This -1 level. And -2 to 2.5, as Elzino's saying, is a common reversal zone in the market. So this area, this is typically your first stage of max expansive energy per se. And when we get full body closures through -2 to 2.5, price will more than likely reach its terminus for that market maker model. So you guys can see we have reached terminus of this market maker model. And what do? We start to reverse. In the 830, 930, 10. I usually trade the 950 to 1010 macro. And my entry model is basically an inverse fair value gap with an order block. Terminus means the end of a market maker model. Let me actually write low. So -1, you would usually check for your low hanging fruit. -0.5. I forgot to include that. This is typically where you're given your fair value gap entry. And turns. Nah, you're good. Liquidity was good, bro. Okay, so you guys can see we reach. Yeah, so you guys can see how we start trending downwards. So the second we break over this candle down here, so this is a bit more advanced, but the first down close candle that we close over, I start to think that maybe the markets this is just a manipulation move to induce selling, because retail traders are seeing this as, oh, it's a breakout of this trend that we have here. It's gonna break out and it's just gonna go lower and lower, but this is just a manipulation move. So the second I see this change in the state of delivery, I immediately start thinking that this might be a manipulation move. But I'd use this manipulation or this change in the state of delivery instead of this one. This one's just a bit more advanced, but your true change in the state of delivery would be all the way up here. Once you see this, you should not be looking to sell at all. All of this price is balanced, and you would not want to sell anywhere in this area. So we reach terminus of our market maker model, and for every market maker model, you're gonna have your original consolidation, and that's gonna be followed by 2 stages of accumulation. So whenever the market accumulates, no matter what, there will always be an expansion that follows it. So accumulation, expansion, reaccumulation right here. I'll label this as accumulation 2 or accumulation 1. And then what do we form? I'm pretty sure we formed an SMT down here. You guys always need to look for SMTs in your trade, like no matter what. Yeah, we form an SMT. SMT. Expansion through -2 to 2.5. I draw it from left to right or right to left. Oh, I draw it from like, let me redraw this. I just draw it from like left to right. From right to left. How long have I been trading ICT? Almost 5 months now. So accumulation, expansion, reaccumulation. And then expansion, and we reach our terminus, and we form an SMT up here. You see how ES keeps pushing up while the NASDAQ pushes lower? This is a key indication that, or this is a good indication that price will reverse. We form an SMT. We get a change in the state of delivery. And we can measure our standard deviation leg from this high to this low. And look what lines up with -4. Our original consolidation and the sell stops that are resting below. So the smart money reversal was formed. We get a change in the state of delivery, and we have standard deviations to align ourselves with pools of liquidity. Let me read the chat real quick. How did I start ICT? Honestly, bro, like, it was spring break and I just broke up with my ex, and I was like, I need to lock the fuck in. So I just binged a bunch of T Trades videos, and then it's just been up from there, bro. But so you guys can see S&T changing the state of delivery in the terminus level of our previous market maker model. So the thing with market maker models is when price reaches the original consolidation, it tends to speed up towards the sell stops that are resting near that consolidation. So this applies to any time frame. So this is also why the silver bullet works, because there's a range to every market maker model. So if I take, so there's an implied range for every market maker model. So I break it up into quarters. So we take the low and we take the high. So 0.25, this area is typically where you want your low risk entry. So your low risk entry would have been up here in this fair value gap, but the NASDAQ never touched this, and I'm pretty sure the ES did. Yeah, the ES took these stops into this fair value gap, so this would be your low risk entry. And near this 0.5 area, you will either see a reaccumulation or a reversal, primarily due to the fact that below 0.5, we have discount arrays resting. So when price breaks below 0.5 of the implied dealing range of the market maker model, this is when we get our low resistance liquidity run, which is our 0.75, and all of this is low resistance down here. So our low resistance liquidity run will only occur when we break 50% of our implied market maker dealing range. Yeah, silver bullet, I don't really trade it too much, but it mainly works because it's a low resistance liquidity run, and it's also the second stage of distribution in a market maker model. My biggest payout, I think my biggest payout, I'm pretty sure it was like $1,000, but I'm gonna submit a payout next week. I copy traded 4 accounts last week. I did pretty good. But yeah, this is why price tends to speed up, because it reaches negative or 0.75 and it just speeds up towards its original consolidation. So we form our smart money reversal up here. So this would be your original consolidation. Low risk entry at 0.25. Consolidation, expansion, reaccumulation, expansion, one more stage of accumulation, expansion. So that was a whole lot. I was just gonna give a quick little overview, but hopefully you guys understand how the markets move based off of market maker models. I use Top Step. Yeah, I usually take different setups. It usually like depends. I'm sort of just experimenting with different setups right now, but market maker models are still my bread and butter setup. Okay, so going back to my top-down approach. Yeah, I do expect price to rally up to all-time highs. I draw the standard deviations by myself. For my analysis, so I start with the weekly, then I go down to the 4-hour, then the hourly, then the 15-minute, and then my entries are based off the 1 minute, 3 minute, and 5 minute. ICT, so I'll drop everyone's names in the chat that I watched T-Trades, Flux, Fees. These three people. Bro, I don't I don't use the software. I like manually enter every time on like different accounts. It's just a pain. I'm just lazy to like look up how to do it. I'll deal with that like next week. Yeah, T-Trades and the fees are just amazing, guys. Justin Rillen. Yeah, so this is pretty much, I don't think there's more to what I look for. It's basically just, I look for news, I look at what the weekly profile is, or what I expect it to be, ERL to IRL, IRL to ERL, and then I try to determine what the weekly profile or daily profile would be. So heading into next week, so since we swept a major pool of liquidity down here, and we also formed an SMT with ES, like major SMT. ES is just a stronger pair right now. Yeah, ES just didn't get anywhere close to these lows. I expect higher pricing throughout the week. So if we drop down to the 4 hour, it's actually more clear to see the market maker sell model on the 4 hour. This original consolidation up here. You have this consolidation, expansion, second stage accumulation, expansion, or first stage accumulation, sorry, second stage manipulation, distribution. So we formed that SMT down there at the lows. And we also formed an additional SMT down here with ES. No, don't worry about it, bro. It's all good. It's all good. So we form another SMT with the ES down here. Yeah. And we get this change in the state of delivery right over here. So this would be, these are your protected lows until the market decides to reverse and start a buy or sell program. Put my highlights on. Yeah. Wait, like, are you talking about the original consolidation and the accumulations that I had, or? Oh, I got you. Let me make it better. That one was whack. Original consolidation. Here's your first stage accumulation. And this is your second stage of accumulation. How long do you I recommend that. I honestly did not paper trade. I just traded one micro until I actually developed a good strategy. I also don't recommend backtesting because there's just a lot of hindsight involved, and you're basically just hunting for entry models. Entry models don't matter when you don't understand what the draw on liquidity is, because at that point you're just pattern trading. So I would say instead of paper trading, trade like a micro or two until you actually develop a good strategy. But I have nothing against paper trading. I do recommend paper trading. Just personally, I traded a micro or two. Yeah, strategy and patience. Yeah, so as I was saying before, we get this change in the state of delivery up here. So these lows down here would be your protected lows. So another thing that I want to point out is this new week opening gap. So we have a gap between Friday's close and Sunday's opening down here, or up here. So this is your new week opening gap. So the thing with new week opening gaps and new day opening gaps, they are both institutional reference points. So price revisits these areas, so they're essentially magnets for price. And when we see a 4 hour body closure through one of these or for the weekly gap, you would want to see a 4-hour body closure, and for a new day opening gap, you'd want to see a 1-hour body closure. So all of this price is balanced. You guys can see full body closures through both sides. So this is your balanced price range down here. So what I wanted to see this week was a return to this BPR, and then we continue pushing up, but we never ended up doing that. Yeah, you can use it as a breaker. And we also have a breaker right here. So we have this breaker block down here. We get this breaker block, we form an SMT after sweeping key lows, and we have an unmitigated gap right here. So a couple of weeks ago, or a week or two ago, this was my initial draw on liquidity. This gap and these equal highs. So we took these highs, we took this fair value gap, inversed it, and price just started accumulating this week. So what I did was, when these candles formed and I saw that we were pushing away from this gap, I took my standard deviation and I drew it from this body low to this body high, and you guys can see we're currently in -2 to 2.5 right now, and we're kind of reversing a little bit. So what I want to see, if not, this is our current parent dealing range. So we have a number of unmitigated fair value gaps down here. We have this one here. We have this one. At most, I'd want to see this gap get traded into, because if you take this dealing range, it lines up with discount. So what I want to look for is a turtle soup of these lows, and then we continue pushing up into terminus, which lines up perfectly with all-time highs. A micro is essentially a tenth of what a mini is. So a mini moves $20 per point, and a micro moves $2 per point. So you can risk a little bit more just to experiment with a micro. Of course, bro. Yeah, I actually haven't watched the 2024 mentorship yet. But if you guys don't have a system yet, I would advise you to watch that. But if you're good and you have a system that works, there's no need for more information. Yeah, I'm more bearish the first few days of the week, especially because, one, we're delivering off of this breaker block, and look at how we closed. We're delivering off of this daily order block. So this day, it's also a daily fair value gap down here. You have this daily fair value gap and this daily fair value gap. So I don't think price wants to necessarily reverse yet, but I would say some sort of retracement is needed before we continue to push up. But then again, I wouldn't be surprised if we just completely reverse from here, mainly because August is known to be a bearish month. Yeah, it's all low resistance liquidity down here. All of this. I don't expect us to return down here though. At most, I'd like to see this fair value gap down here. We also have, this new day opening gap, this new day opening gap. So this will most likely act as a magnet for price. Yeah, 2 to 3 hour long videos, bro. ICT says he's gonna stream for like 2 hours, and then the guy just ends up streaming for like so long. Draw OTE from the low to the high. This low, right? Low to the high. Yeah. Wait. Am I doing it right, liquidity, or is it a different low that I should anchor it? Oh, the numbers that go up from, okay, so these are standard deviation levels. I'll send my settings in the chat. these are essentially levels that price will visit off of a manipulation leg, but there also has to be logic applied to them. There have to be liquidity pools. Like for example, you see how this -2 lines up above. It has to be above or below the pool of liquidity. So -2 lines up above this pool of liquidity, and price reaches into that level after we get this manipulation. Go to the daily time frame. From this low, right? Liquidity? Or from this high? Or is it just this dealing range? I don't use OTE too much. I'd say futures. Yeah. Yeah, as liquidity said, you guys can see this dealing range, our full dealing range. 0.5 lines up, or this is, anything above this would be premium, and anything below this 0.5 would be discount. And this fair value gap down here lines up perfectly with the logic that we have to tap into a discount level before we start pushing up. So this is what I'd look for heading into the rest of August. A push below into these lows and then higher. The monthly candle is also really funky looking right now. Like it's a huge wick. It's sick. Like this is crazy, bro. Because we're delivering off of this order block here too. So this week I would love to see lower and then higher. So something like a midweek reversal or a classic buy. I mean, that's all I really have to cover. Let me know if you guys have any questions. FEG 18100. No, these ones, this is all balanced. So if price reaches back into this, I expect us to just flip from a bullish month to a bearish month. Because you can see how price goes down and then up with bodies. This is all balanced down here. So I don't want to see price return down here. Because price only does one thing, or two things. It seeks old highs and lows, or it rebalances inefficiencies. I don't really know what months are bullish. I just know that given seasonal tendencies, August and September are historically bearish. September, I don't really know what to expect in September. If August prints bullishly and we make new all-time highs and we have no indication that we have to reverse or we want to reverse, the main reason why we had this huge jump in July was to rebalance all of this price action, because none of this was balanced at all. So now I wouldn't be opposed to us making just new higher highs throughout the rest of the year and the rest of 2025. This isn't financial advice, by the way. It's just what I think. What pair? I trade NQ the most. I've been trading micros lately. 3M and Q is what I've been trading for the past 2-ish weeks. I'm just trying to refine my edge a little more. Nah, I still prefer the 4-hour chart. I'm not gonna lie. The 4-hour is way better. But the 6-hour, I just use it because of the sequence I was talking about earlier with the 8:30, 9:30, and 10. Yeah, extra confluence. Yeah, honestly, yeah, next week could be like a chill week. Um, Mostly because, but I do expect this month to be an AMD X. So next week could either reverse or continue. I'm favoring a continuation, but anything could happen due to the seasonal tendencies of August. August is just not a good month. It's weird price action. Any roadmap? Okay, so the first thing I would do I feel like a lot of people just head straight to ICT's mentorship. ICT is a very good teacher, but I feel like he yaps a lot. So I would recommend you watch T Trades first. Um, and once you basically understand how price moves, he has a playlist, I'm pretty sure, of education. I just watched that entire playlist. So I would say watch that first, and then you can go through Key's WAP course, and whatever questions you have, bro, like just type it in like any chat and just ping me and or me or Key or anyone, and we could just answer for you. T Trades. T Trades. Yeah, T Trades, Flux, and Fees. Those were the three guys that I watched. How did you get live in 5 months? Um, Honestly, if I'm being real with you guys, I sat down like after I started trading ICT, like so when I first started, I just like took every fair value gap that I saw. I didn't understand anything about structure. Um, so this was after I just watched T Trades, and then I stumbled upon Flux and oh yeah, AM is great. AM is really good. But as I was saying, I stumbled upon Flux and Fees, and they talked about higher time frame narrative and how that matters more than what your entry model is. So over the summer, I've just been grinding that, and it's just been up from there. But to be honest, the one thing I do have to work on more is mental. So that's why I'm just trading micros for now. Because the only thing that changes is your size. Like, just focus on the executions, and the only thing that changes is your size. Can you explain SMT? Yeah, I got you. So, I'm gonna delete. Any of you guys, if you want to screenshot this, you can, but I'm gonna delete this real quick. So, SMT is pretty much a Kraken correlation between two highly correlated assets. So an example would be the S&P or ES and the Nasdaq NQ. Yeah, S&T is divergence. So you see on January 31st, you see how Nasdaq pushed below this low, while you see on the right side ES didn't. This is a Kraken correlation between two correlated assets. So they're supposed to move in the same direction, making lower lows together, higher highs together. But when one makes a lower low, like we do on NASDAQ, and the other makes a higher low, like we did on the ES, this is a sign that smart money is in this area and they don't want to continue pushing price in the current trend. So we're in a clear downtrend. The NASDAQ sweeps this low while ES doesn't. So this is also on the daily time frame. So the higher you go up on the time frames, the stronger the SMT will be. So we have an accumulation. So there has to be logic behind the SMT as well. You can't take any SMT without logic. So the logic being, we have an accumulation, we manipulate into this order block down here on the daily, and we also have this fair value gap right here. So you need a key level paired with an SMT. So accumulation, manipulation, and took two key levels. We form an SMT, the Kraken correlation, and what happens? We reverse. So I'd say the one thing you should focus on when looking for SMTs is whether or not we're at a key level and whether or not price has logic behind the SMT. So, like I said, the key level and what stage of delivery is price in. Uh, do you got that, or do you want me to explain more in depth? I think T Trades has a video on SMT. If he does, then you should definitely watch it. Yeah, of course, bro. No problem. Yes, exactly. Another thing you could look at is YM, which is the Dow, but I don't really look at that because it's always doing its own thing. Oh yeah, SMT where it goes the other way. Let me actually give you guys an intraday example of this recently. Oh, on Friday. Look at this. Yes. Do you guys see on the right side? We take this high on ES, and the Nasdaq fails to take this. And then look what happens after. Reverse. So this week was the last 2 days of this week were pretty good. Like I was telling you guys before, we usually form a reversal on Thursday. Look at this. All of this accumulation, we sweep these highs on Thursday. And if you draw your standard deviation, negative 4.5 lines up with this rejection block. Or negative 4, rather. So, turtle soup, sweep these highs, reverse. I don't trade 5 days a week. I usually either skip Mondays or I de-risk. But the days that I usually go heavy are Tuesdays, Wednesdays, and Thursdays. Fridays sometimes are good, but I also de-risk on Fridays. I wouldn't say that it tells the future per se. I would just say that you should frame a trade for either one based off the SMT. That's primarily what I use the ES for. I just use it for SMT. The Nasdaq I feel like is just way better when it comes to entries and just trading in general. Yeah, Monday and Friday can be strange. Like Monday can just completely rip to either side, and then Fridays tend to cap off the range, so I don't like trading Fridays too much. I've lost so much money trading Fridays. Of course, bro. Yeah, SMT you shouldn't treat it as like a holy grail. It's just another confluence. It's a strong confluence, but it shouldn't be the only confluence that you use. Gold SMT? I actually don't know what the correlated asset for gold is. I mean, I'd assume it's like silver. Yeah, silver. So basically, if same logic, one goes higher and the other fails to go higher, for example, that would be a Kraken correlation. Anything else you guys want me to go over, or any questions? Oh, I don't know anything about forex, bro. I'm not gonna lie. Best IC3 entry models. Honestly, bro, Key's entry model is just OP. IFEG order block SMT sweep doesn't get better than that. I just trade NQ. Yeah, I only trade NQ. NQ and MNQ. Yeah, futures go by ticks, but I don't. I just have the dollar amount usually. I know ticks are good for, I guess, mental a little bit, but I just like seeing the dollar amount. Bro, we'd love to have you, bro. It really is a great community. I start at the weekly time frame, so I think I still have it up. Yeah, so first thing I do is look at the news, then weekly profile, and then weekly I check to see if we're going from IRL to ERL. So that's just what I look for. So weekly, daily, 4 hour, hourly, 15 minute. I'm still trying to find my strategy. It's all good, bro. Like there's no rush. Once you find your strategy and you pair that with a good understanding on draws on liquidity, and you develop a good system of rules and psychology, that's all you need. There's no rush. Can we do YM as a practice to do quarterly theory on the daily? Um, Honestly, I wouldn't even touch YM. It's just a bit. It's always in its own world. Let's see what YM's doing right now. Yeah, like look at this. YM's just so strange. It's just doing its own thing right now. So I wouldn't even touch YM. TBH. Yeah, NQ and E, yes, they're delayed unless you buy the, I forget what it's called, but I think it's like $7 a month. Best community I've been in, yes, bro. How to understand draw on liquidity when the previous day high and low have been taken out before 10 a.m. So when the highs and the lows are taken before 10 a.m., so let's say by 9, those highs will get targeted. Um, I don't like to use 9 a.m. highs and lows as targets, but if the previous day high and low gets taken, or London takes Asia high and Asia low, you can expect a seek and destroy profile for the day. So just something like a broadening structure like this. We take out highs, lows, and just bounce between a defined range. Having multiple contracts, yeah. So the thing with multiple contracts, so when you have multiple contracts, you can just scale in and out, and you can just pyramid up. But I would only recommend multiple contracts on MNQ. NQ is just way too much for a $50,000 account. Support and resistance, but I want to fine tune it with more confidence for better entries. I used to trade, like when I first started trading options, I used to trade support and resistance, but I'd say VWAP is a good confluence, and then obviously your moving averages, um, supply demand, fair value gaps. I know a lot of support and resistance traders use um, fair value gaps. Bro, yeah, Kane made like $1 million, bro. Like in a day is just crazy work. What flat? I use Top Step. Yeah, Kane is just crazy, bro. I actually don't know what strat Kane uses. Yeah, I use Top Step. Uh, I don't. I haven't used MetaTrader, but Top Step has accounts through Tradeovate and their own platform. So I just like down here you log in through Tradeovate, and that's about it. Yeah, I use Tradeovate or that's what like I like about Top Step and Tradeovate. I'm pretty sure Apex has it too. You can just look at Trading View, place your orders through it. Kane trades trend lines. What? Oh, what do they use right now? Like fast track trading. Ah, yeah, that's whack. I'm having trouble. Okay, so the one thing I would recommend is firstly identify what the draw on liquidity is, and then for entries. So when you have a 1 hour PD array or a high or a low, you frame a 5 minute entry. But for more precise entries, I would say enter during a macro, like 850 to 910, 950 to 1010. Usually that will give you a very good entry. But for the higher time frames, I just use the weekly 4 hour and weekly, daily 4 hour and 1 hour. And for intraday structure, I use the 15 minute. And then entries is 1, 3, and 5 minute. Yeah, this does work with Forex. I just don't know too much about Forex because I've just been trading NQ. Nah, that macro is the turtle soup macro. So I look at that macro and then base the next macro off of that. It also lines up with the hourly AMDX XAMD. So 15-minute cycles, you line it up. 50 can either be distribution, reversal, or continuation. Like I was telling you guys, the 8:30, 9:30, 10. So for my entries, I break up. So let's say I want to trade the 9:50 macro. So I break up the 9 o'clock to 10 o'clock 1 hour candle into 4 quarters again. So you have 15-minute cycles of either XAMD or AMDX. And if I see, let's say, 9 to 9:15 accumulate, I would expect 9:30 to manipulate, 9:30 to 9:45 to distribute, and then the macro 9:50 to 9 or 10:10. Based on whether or not we meet the draw, I would expect the continuation or reversal. If you guys don't have any more questions, I gotta go in like 3 minutes. I gotta go grocery shopping with my mom. Just let me know whatever questions you guys got. Just drop them in the chat as well, like Gen chat or Cobra's. Yeah, no problem, guys. I'll upload the video on my YouTube channel. I'll send a link. It's 12:30 a.m. whiskey time. Enjoy, bro. Enjoy. Yeah. So I also split the 1 hour candle. So those would be 15-minute cycles. So 9 o'clock, for example, 9 o'clock to 9:15, 9:15 to 10:30 or 9:30, 9:30 to 9:45, 9:45 to 10. Ketamine type is crazy, bro. Of course, bro. Of course. Yep. I'll see you guys same time next week probably, or I think he's gonna do the class on Sunday. I'll hop in and out.